Strip center owners. A newer roof, not having a claim before, and great tenants can trick you into thinking the risk is low. But real estate is one of the highest risk businesses for large claims. Whether it be natural disasters, a fire, water damage from a frozen pipe, we see it all the time. In this video, I'm going to show you the exact coverages building owners need before you start shopping for quotes and some example pricing. I'm Austin Landis, and I run a commercial insurance agency with real estate clients across the US. Insurance works very well for large businesses because they have a lot of expertise and great insurance people at their disposal to help them avoid traps. I create these videos to give smaller and mid-sized businesses the tools and the resources to never get taken advantage of by insurance companies. There are so many traps and pitfalls that strip center building owners fall into on their insurance policy. They get hit with co-insurance penalties after construction costs jump. They have to pay for code upgrades out of pocket because ordinance and law coverage was taken off their policy. Water damage isn't covered because the carrier added a water damage exclusion, and it could be a million different things. On the liability side, the fine print can quietly erode your policy. Assault and battery exclusions can leave you hanging after a parking lot incident, or animal exclusions that turn a dog bite into your problem. Before you even look at premium, make sure that you have a list of requirements that meet your objectives. There are too many things to review in this video, so I've included a checklist that you can download detailing what coverage options that you have and what you should require out of any quote that you buy to make a more educated buying decision. Here's my method for insuring strip centers. I secure the property coverage first. This is the policy that has the highest cost, is the most risky, and the coverage where a lot of the exclusions will be added so that claims don't have to be paid. This pays for property damage that occurs to a building that you own. For example, if a wildfire were to damage or burn down your building, this policy would pay to replace it. I seek out a policy with agreed value or a waiver of co-insurance tied to the current replacement cost valuation of the building. I also want ordinance and law coverage to cover the undamaged portion, the demolition, and the increased cost to rebuild to code if an inspector were to come out and force you to upgrade the building due to changes of code in your municipality or city. I want business income or loss of rents coverage written so that you can maintain cash flows while the property is being repaired or rebuilt. I want to make sure that we have an adequate amount of water damage limit. If I have to have it limited, I want it at least $100,000, but I prefer not to have any kind of limit or exclusion at all. I make sure that theft is included as a covered peril and not excluded on the policy. I want to make sure that replacement cost applies to the roof if the roof is around 10 years or newer. I want to make sure that deductibles are not too large for the client, especially the wind deductible. These can get high, especially if you have a percentage deductible. A 5% deductible on a large building can be very large. And lastly, I look for equipment breakdown coverage included on every policy. Once the property side is done right, I then add the general liability policy, ideally with the same carrier as the property. This policy covers your premises liability. For example, if someone tripped over a curb and claimed that it's dangerous, and then they sue you for that. With general liability, some of the exclusions are more difficult to get away from, especially if you're with a higher risk, excess, and surplus lines insurance carrier, but I keep an eye out for the following. The first being assault and battery limitations. If it's excluded, I try and add it back with some kind of limit, whether it be 50, 100,000, but ideally it's not excluded and there's no sublimit. Additionally, an absolute liquor liability exclusion, which is not good if you have any sort of bar as a tenant or any kind of drinking establishment that could rope you into a dram shop lawsuit. Once you have a good insurance package put together, I have a couple suggestions. The first, instead of lowering the building value, just increase the deductible. With penalties, lowering the value benefits the carrier more than it actually benefits you. Your coverage will go down faster than the premium goes down. Increasing the deductible creates more predictable claims outcomes, and you'll still probably pay out less per claim anyways. Always require your tenants to have liability insurance and add you as an additional insured on their policy. If they don't have liability insurance, your policy will end up paying for all of their issues. Keep records of all construction projects, especially the roofing projects or updates that you do. Many policies will depreciate the roof if it is over 10 to 12 years old. Being able to prove that the roof is newer will absolutely come in handy if any claims adjuster claims that this is an older roof than it actually is. Next, look out for the protective safeguard endorsements that certify that you have certain protections on the building, such as a central station alarm or a fire sprinkler system. If you accept the discount from having these items and at the time of loss you do not have them or they were not maintained, the claim can be denied. Make sure if you take the discounts on your policy that you're 100% sure that you comply. Lastly, get a catastrophe model for your property. You should be able to get this from an agent in the real estate space and looks something like this. It puts your property through a risk modeler and tells you what claims are most likely to happen based on the area that you're in. Real estate is one of the few industries where we regularly see catastrophic full limit losses. We have multiple open claims right now for this exact thing. A couple for tornadoes, some for wind damage. We had a fire completely burn down a $14 million building recently. It is completely random, and this means that you need a serious policy from a serious insurance company, and the effort to find it is 100% worth it. I'm including a concise checklist below. Hand it to your preferred agent or carrier, and it'll give you more meaningful and strategic conversations with these people about your insurance. The price gap between a really strong policy and hollow coverage with a lot of exclusions is usually pretty small until the day that you have a claim. A quick word on pricing expectations and how to present yourself to the market. Carriers are going to look at things like construction and protection, which is, wooden frame versus masonry and sprinklered versus non-sprinklered, the age and conditions of the roof and your HVAC systems, your tenant mix, your hours of operation, your prior insurance losses, the vacancy levels of your property, and their experience in your area. You can't really change geography, but you can document upgrades, show a leak response plan, keep service records for alarms and sprinklers, and validate your building limits with current data. That's how you earn better terms without sacrificing the coverages that you need. Here are some real examples of pricing for strip centers just like yours. In the state of Texas, we have a quote for a building value of $1.3 million. They have a loss of rents coverage of $130,000. The deductibles on the property is $10,000. The property premium is $6,932. The general liability premium is $1,000, and that is an annual cost of $7,932, which equates to a monthly cost of around $661. The second example is in the state of California. We're quoting a building with $1.2 million limit with a loss of rents coverage of $240,000. The deductible on this property is $2,500. The property premium for this quote is $1,865. The general liability premium is $434 for an annual cost of $2,299, which equates to a monthly cost of around $191. Our third and last example is from the state of Texas again, which is a building value of around $1 million. The loss of rent or business income limit is $90,000. The deductible on this property is $10,000. The property premium alone is $6,895. The general liability premium came out to be $750 for an annual total of $7,645, which equates to a monthly cost of $637. When pricing out building insurance, the type of tenants you have is probably the largest indicator on if your insurance pricing is going to be high or not. Some common tenants that will kick you out of preferred insurance carriers are bars, tattoo shops, cannabis dispensaries, pawn shops, tire warehousing, and other tenants that have either liability issues or cause increased fire potential at the property. If you're a building owner and you want your insurance handled the right way, grab the checklist below, start a quote on our website, or use the link in the description to schedule a time to talk with me.